Let's go to the economics of this trade and tariff war and the risks that local investors and businesses need to keep an eye out for. Bridgette Leckie is the Chief Economist with Koda Capital, been trying to calculate all this with me now. Bridgette, when you put your head around this, you can see the volatility, you can see the posturing going from, China versus the United States. Try to work out as an investor or a business right now as to where the risks are. Because we're even seeing some areas where we think Australia's going to be big beneficiaries out of this. So it's not just this is all bad. This is actually good in some areas, isn't it?
Absolutely. So I'd say what we've got right now is an event-driven market with structural change underpinning it. In other words, there's a lot of noise, there's a lot of change, there's a lot of headlines, but the world is shifting. We've had a very much US-centric driven world, driven by the US exceptionalism. And that's one of the things that really is now coming unstuck because the US was on this model of running these deficits and debts that's untenable.
So we're having a look at some of the products that basically China takes from the United States. And it's things like oil seeds and a whole bunch of other stuff that Australia produces.
Yes.
Now, as China needs those things, and given this fact that Australia has no tariffs on goods going into the United States, Australia could end up becoming a big winner out of this. And also manufactured goods that can't go to China anymore, they're going to land here in Australia at cheap prices. Televisions, fridges, washing machines, whatever it might be.
Absolutely. So we could see, and I think we will see, core goods deflation. Lower prices. The US is grappling with obviously higher prices. I use the toy prices. The Barbie dolls are going to double in price. But I think we need to take that, Ross, into context of going back with the whole globalization story. That Barbie doll in, say, the 1970s was $600 in today's terms. That's gone down to $10. So we're now going to see that going up to $30 in the US. So that's sort of the fallout in terms of reversing a bit of this. But you're right, there are going to be some relative winners. We are well placed.
So that being the case, central banks right now are also in a strange position because in the United States, if prices are rising, then they have got pressure to raise interest rates potentially if inflation takes off. The same in China. Here in Australia, where we float with the world, there might be price deflation, as you point out. There might be pressure for interest rates to stay much lower than they are right now.
Well, there are. That's why the Reserve Bank is forced to go at its next meeting in terms of that's the expectation. 4 rate cuts, as we're talking about right now, are priced into the marketplace. So absolutely. And we've got an election which is likely to be stimulatory. So I think we are going to see cheaper goods coming in, which is good. I think also industrial commodities are well placed. In terms of China is going to have to put in place more stimulus in order to be able to deal with the hole that they've got. So
that's commodity prices we're talking about basically that Australia relies on. So again, Australia might end up the lucky country as a beneficiary out of this, even though it's got to play a very careful game in politics between the United States and China.
Absolutely. So it's walking this fine line, but we are, again, well placed. But we've got to have to build relationships elsewhere. We've got to beef up relations with Europe. Europe is looking better than what it has done in terms of making some structural changes. As I mentioned before, in terms of the fiscal side, the fiscal rectitude, that fiscal brake has now been removed. Europe works well in the crisis. Europe, you're starting to see greater degree of unity. Europe's also holding up to the US tariffs.
So then, therefore, threatened tariffs is going to be, say, for example, copper. Australia's a major copper producer. So there are things that Australia's going to get. So the problem is, if you've got this flood of cheap imports into the country, Australia's local manufacturing sector could be one of those that really is hurt by this as well.
Absolutely. Absolutely. That's the thing. So this is where you get in these winners and losers. But what I would say, sort of dialing us up a little bit, we're only 3 months into this in reality. It's only April. This started at the end of January. So we've got a lot of sort of whiplash, so to speak. And I'd be saying, don't be making rash decisions. Sit, watch. How is this going to pan out? We've got obviously tariffs being on hold or paused for the time being, or some. We need to see what happens there. Does it result in trade deals, or do they get totally unwound, or do they go fully fledged in? We don't know the answer to that. I think also it's really important, this time in 12 months, the US president will be looking towards the midterms. Yes. He's not going to be wanting to accept, I don't think, large stock losses and economic decline in 12 months' time. So in reality, he's got 12 months to get through this painful medicine in order to achieve what he's wanting to. So again, I come back to businesses, just be careful here. Don't panic, don't knee-jerk. There are a lot of moving parts. This is a structural change, not a cyclical one.
Yep.
Very different dynamic.
Good stuff. Bridgette Leckie from Koda Capital, thank you so much for your time.